Howdy, everybody. Welcome to Liberty Call for Thursday, February 6th, 2025. Hope you're having a fantastical day out there in the interwebs. It's another gorgeous day here in Colorado. Sun's out. It's not too hot, not too cold. My main man Jake's back here. He's excited. He thinks he's going to go play ball when we're done, but he's got a bad shoulder and a little too much hard playing. He'll be 7 in a couple of months. So I think he's starting to realize the middle age is catching up to him. So we're gonna have to just take it easy for a couple of days. But anyways, he is still on the watch for retirement retrieving. So if you need any help with that, let us know. All right. Well, markets are mixed as jobless claims rise up to 219,000, adding fresh uncertainty. The Dow is slightly up, but the S&P 500 and Nasdaq are dipping as investors digest a wave of earnings. Honeywell announced a three-way split. Qualcomm is sliding 4% on weak licensing revenue, and Eli Lilly is up after beating profit expectations despite sluggish weight loss drug sales. Meanwhile, the Fed is easing stress tests for banks, and skepticism is growing over Treasury Secretary Scott Bessent's efforts to manage bond yields. Let's dive in and break it all down. But before we get started, I need some help from you. Could you give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell? All right. Well, now we're ready to get into the markets. Dow Jones was down 0.28% today, 125 points, closed at 44,747. S&P 500 up 0.35%, 21 points. 21 points, closed at 6082. NASDAQ up 0.51%, 99 points, closed at 19,791. The VIX was down 1.97% today. It's at 1546. Canada down 0.14, Brazil up 0.57, and Mexico up 2.29%. In Europe, Germany was up 1.52%, the UK up 1.21%, France up 1.47%, Netherlands up 0.62%, Spain up 1.55%, Italy up 1.48%, Switzerland up 0.3%, and Portugal up just 0.05%. Russian exchanges both green again today. MOEX up 1.34%, RTSI up 2.54%. And the Asian markets, starting out with the Nikkei in Japan, it was up 0.63%. Australia up 1.23%. New Zealand flat at 0. Let's see. The Shanghai in China was up 1.27%. Shenzhen Component up 2.26%. China A50 up 0.99%. DJ Shanghai up 1.44%. Hang Seng up 1.43%. And the Taiwan weighted up 0.67%. All right. Good stuff. Looks like the markets are in a better mood today. Well, except here domestically. All right. Well, let's get to the market recap. S&P 500 gives up gains as investors weigh earnings ahead of key jobs report. All right. U.S. stocks wavered on Thursday as investors digested a flood of corporate earnings and fresh labor market data, all while gearing up for Friday's key non-farm payrolls report. Initial jobless claims rose to 219,000 for the week ending February 1st, slightly higher than the expectations of 214,000 and up from the prior week's revised figure of 208. This uptick aligns with signs of a gradually cooling labor market. However, resilient hiring trends and relatively low layoffs suggest the job market isn't facing a sudden downturn. The upcoming January jobs report is expected to show 169,000 new jobs, down from December's 256. These data points bolster the case for the Federal Reserve to hold interest rates steady until at least June. Amazon is set to report after the bell, with analysts eager to hear about its AI investment plans, especially in light of recent competition from Chinese startup DeepSeek. Other tech giants like Alphabet, Meta Platforms, and Microsoft have already faced scrutiny over hefty AI expenditures. In other earnings news, Eli Lilly surged 3.4% on strong demand for its obesity drug Zepbound. Yum Brands jumped over 8% as budget-friendly Taco Bell offerings boosted fourth quarter sales. So in one report, people are using a lot of the drugs for fatties. And then in the next report, Taco Bell is doing so well that, their numbers are great. All right, finishing up, Tapestry rose 12% after raising its 2025 outlook. Chipmakers struggled with Qualcomm falling over 4% after forecasting no growth in its licensing business due to the expiration of its Huawei deal. ARM Holdings and Skyworks Solutions both dropped over 4% and 24% respectively as concerns about future demand, particularly from Apple, weighed on sentiment. And Ford also slid more than 6% after forecasting weaker annual profits amid lingering uncertainty over U.S. tariffs on Canadian and Mexican imports. All right, so that's that. Let's dive into the jobs report. Weekly initial jobless claims edge up by more than anticipated. All right, initial jobless claims in the U.S. rose more than expected last week, signaling a gradually cooling but steady labor market. The Department of Labor reported 219,000 first-time unemployed benefit applications for the week ending February 1st, slightly above expectations of 214. The prior week's figure was revised upward to 208. The 4-week moving average, which helps smooth out volatility, also increased to 216,750 from 212,750. This data comes ahead of the crucial non-farm payrolls report for January, set to be released tomorrow. Economists forecast that the U.S. added 169,000 jobs last month, a slowdown from December's robust gain of 256. This report will provide deeper insights into labor market demand, which is closely monitored by the Federal Reserve and their policymakers. Earlier this week, separate reports indicated that private payrolls expanded in January, while job openings fell by the most in 14 months. Despite mixed signals, resilient hiring and relatively low layoff levels suggest that the labor market isn't facing an imminent downturn as of yet. This stability supports the expectation that the Fed will keep interest rates unchanged until at least June, maintaining a cautious approach as they monitor evolving economic conditions. All right. Well, in more layoff news, this comes to us via Zero Hedge. At least 40,000 workers accept the DOGE buyout as deadline looms tonight. Yeah, there's a lot of hand wringing on social media. These federal employees are just crying. Oh my God, it's not fair. Don't go out and talk to other people. Let them know what's happening. Put a face to to these job losses. Sorry, if there's only, or let's say you own a taco truck or a taco stand in a small little town, and everyone, over the course of 10 years, all the carnivores move out and nothing but vegans move in. If no one's buying your tacos, you're out of business. That's just the way it works. And, we're $37 trillion in debt. It would take, even if we slashed, spending by half, and, let's say, out of the $4 trillion that comes in tax revenue, let's say we only spent $2, and then we took the other $2 and paid, towards, the debt service. It'd take like 10 or 15 years to pay it off at this rate. So, yeah, these people, I'm sorry you're losing your jobs. However, the American people probably don't want whatever you're doing for the government to be done. And secondly, especially if you work in an agency that is, unconstitutional in the first place, and that, the federal government doesn't even have jurisdiction for things like EPA, Department of Education, things like that. Outside of the military, most of these federal jobs are not constitutional in the first place. All right, well, let's dive into the article. Thursday marked the final day for federal employees to accept the Trump administration's buyout offer, which provided 8 months of pay and benefits for those who voluntarily stepped down. According to Bloomberg, at least 40,000 federal workers, about 2% of the civilian workforce, opted into the resignation program. Deferred retirement applications have steadily increased and were expected to surge by the deadline. The Office of Personnel Management informed employees that most federal agencies are likely to undergo downsizing through restructurings, realignment, and reductions in force. This could include furloughs and reclassifying a significant number of federal employees to at-will status. Physical office considerations and divestitures may also lead to changes in office locations. Federal worker unions opposed the buyout, urging members not to accept the offer and filing lawsuits to block it. A court hearing was scheduled for Thursday afternoon. On social media platforms like Reddit's Fed News Forum, federal employees encouraged each other to resist the program. Hold the line. That's what they keep saying. Hold the line. Hold the line for what? Again, the American people don't want you anymore. Go out and find a real job. Let's see here. President Trump, alongside Elon Musk, who serves as a special government employee leading the Department of Government Efficiency, has been pushing for transparency and cost cutting in federal agencies. One notable achievement has been the restructuring of USAID, which has been folded into the State Department, limiting its previously unchecked budget. The administration estimates that between 5 and 10% of the federal workforce could eventually accept the offer, potentially saving taxpayers up to $100 billion as part of Trump's broader agenda to reduce government spending. And what I would do is that I'd walk in tomorrow and be like, all right, everyone who already left, great. The rest of y'all, you're fired. You don't get paid anything. So that'd be me. But I'm a heartless bastard. So, all right. Last up, one more article from Zero Hedge. Trade wars bring pain and opportunity. This was written by James Rickards of thedailyreckoning.com. The trade wars are officially back in full swing. On February 1st, President Trump announced a sweeping set of new tariffs, 25% on all goods imported from Mexico and Canada, with Canada Energy only at 10%, and an additional 10% on Chinese imports. With these measures layered on top of existing tariffs from 2018, took effect on February 3rd. In response, Canada slapped 25% tariffs on select U.S. imports and warned Americans of tangible consequences. I think they were going to put tariffs on things from red states, to be extra mean because, that's how they are. China countered with tariffs of 15% on U.S. goods like coal, LNG, and agricultural equipment, alongside new export controls on critical minerals essential for high-tech products. Beijing also launched antitrust investigations into Google, Nvidia, and hinted at scrutinized Intel, escalating tensions further. The trade war scope is now global. Trump has signaled upcoming 10% tariffs on European Union goods, despite recent concessions from Canada and Mexico, highlighting that any negotiation delays are temporary. With Canada and Mexico accounting for nearly 30% of U.S. imports, the fallout could be significant, particularly in industries like automotive and agriculture. Trump's rationale includes combating illegal immigration, fentanyl trafficking, and addressing unfair trade practices. However, Chinese companies' investments in Mexican factories to sidestep tariffs complicate matters. European automakers with plants in Mexico, like Audi, may also face severe consequences. Trump's broader vision aims to revive U.S. manufacturing through high tariffs, fostering domestic investment, and boosting wages. While critics argue these policies may trigger global trade collapses akin to the 1930s, Trump's team insists they'll usher in a new golden age for American workers. Investors should brace for volatility, but also look for opportunities as this global trade chess match unfolds. So, I don't know. I mean, this stuff I'm not opposed to. The stuff with Gaza, I'm not really a fan of. Military intervention in the Middle East leads to nothing but heartache and death and more war. So, anyways, that's everything I had to cover for today. Hope everyone got something out of this. So if anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a call. I'd be happy to help. All right. Well, hope everyone has a wonderful evening, and I'll talk to everyone again next time.